Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 12th day of September, 2018, and this is the Daily Report for Gold and Silver. Nice, respectable move in the precious metals complex as news emerges that the U.S. is reaching out to China to hold talks prior to them imposing the tariffs that President Trump mentioned last week, amounting to about $200 billion. Gold futures up $9.40 currently, with December's most active contract trading at $12.1160. Silver also a respectable gain, almost a full percentage point, up almost 14 cents at $14.29. Palladium gaining about 1/3% at $9.64, and platinum gaining almost 1.5%, a net gain of $11 at $800.60. Now, this was partially a result of a weakening U.S. dollar, the dollar losing about 42 points today, closing below 95 at 95.80.5. And that is a net gain of a little bit over 0.4%, and that was responsible for roughly 34% of today's gains in the spot market, with the remaining gains contributed to buying in the market, whether it be short covering or initiation of positions. In terms of U.S. equities markets, they were mixed in that the industrial average closed up about 27 points at 25,998, but the composite did close lower on the day, down 18 points at 79.54, and the Standard & Poor's closed in essence unchanged, up a point at 28.88. Traders, the first chart that I do want to pull up today is a combination of gold futures on the top. These are 2 weeks in length in terms of the candlesticks, and the dollar index on the bottom. We can see that there's a definitive reverse correlation between dollar weakness and strength in gold, or gold weakness and strength in dollar. Now, I've just put up the Kitco Gold Index, and this references today's move in the spot market, which closed up about $8.10. But what you can see from today's action is, unlike many cases where the dollar is really the majority contributor to a move in gold, that is not the case today, because the change due to a weakening U.S. dollar today really only accounts for $3.50, or about 34% of the overall move, that $8.10 move, with the remaining $4.60 directly attributable to buying in the market. Because traders, that is an important distinction, because when gold prices move higher and they are predominantly based on buying rather than a dollar weakness, it is more significant to me, and that's exactly what we're seeing today. Currently, we have gold at $12.1160. This is most active December's contract. We are looking at a daily chart. We are short a position at $11.9940, and we have stops just above $12.18 at $12.18.13. Today's high was $1,213.90, so just a ways away from that. But if we do not see any kind of softening in the market, we will either get stopped out or take this particular trade, take that stop to the market. I believe that there is still some real resistance in this particular price point, and that's between $12.10 and $12.20. My sense is that should those talks begin, we could see a spike to the upside in gold. If they break down, however, if nothing comes out of these talks, we would see a return to dramatically lower pricing in gold, as the dollar would pick up steam and once again get stronger. For right now, though, traders, we are going to stay the course. My recommendation is to maintain our current position as well as our current stop. Traders, the truth is, until we get an effective close above this current resistance area, and I'm looking at the area, as I said, just above current pricing at about 12.11, 12.12 to about 12.18, 12.19. Until we break above that, I have got to remain bearish, because I do believe that at least on a technical basis, we have some real resistance. However, we must note that this moves recently have been fundamentally based, and a change in the fundamentals in the market would certainly change our overall outlook. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.